Welcome back to my channel, Value Investors. In this video, I'm going to be reviewing, analyzing, and making a decision on whether I will buy, hold, or sell Kroger stock. Kroger is one of the world's biggest food retailers and overall has been a really good company for a long time. They are operating really efficiently, paying a nice dividend. Warren Buffett is a stockholder, so it's really been a reliable company for a long time. I'm going to go through my process, value the company, and then make a decision if I'm going to buy more shares in Kroger, hold my shares, or sell my shares. You can do me a favor and like my video and subscribe to my channel. I'd really appreciate it. I'd especially appreciate any comments you want to put on this video related to Kroger. I'm going to evaluate Kroger in three areas. First is the company, the management team, and the industry. Do I like all of the above? Second is the balance sheet. Do I think their debt is under control? Is the balance sheet free of problems? And last is the discount. Am I getting a discount on shares that I buy in Kroger today? And based on the answers to those questions, I'm going to buy, hold, or sell Kroger. Getting my head around the business is quite easy because I've been going into Kroger's to shop for my groceries for a long time. So I understand, first that they're a very stable industry. We all need food. I think they do a really nice job. I think their selection's good. And overall, I think it's just a really good company. It's not going to grow, and double in size in the next 2 years or 3 years like a technology company, nor is it going to have a really high PE. Kroger's just a really reliable company, and it's a reliable stock, a reliable dividend paying company. Their management team is arguably the best in the grocery business. I really like their management team, really understand the company. And, this is a good stock for my income portfolio. Good, stable companies that pay a dividend. Kroger also buys back shares. That way, the stock price is held in at a nice level over time. The scale of Kroger is massive. They have over 2,700 stores, which is huge. They affect 60 million households, and they have a lot of good data so that they could know what to carry in stock, what people really want and buy. They have a pharmacy business, so they have distribution of healthcare. Very interesting. They're even getting into fuel, so they distribute gasoline to consumers. I like Kroger. I know they compete against Walmart and they compete against Target now. And I understand Walmart and Target. I think those are really good companies. I happen to believe that when a company diversifies too much, it actually could really backfire on them. And I like that Kroger really sticks to the grocery business and some related industries like pharmacy, as an example, maybe some fuel. But the principle, the core business should continue to be grocery. If they do that exceptionally well, they're going to do really well. Good example would be Costco. Costco's just been doing great, and they have a real good focus. I'm hoping that Kroger stays in the grocery business and continues just to get better and better, provide more value to the customer, make sure that the customer is very happy shopping at Kroger. One thing that I like about Kroger is they're in real partnership with the stockholder. What I mean is that they really think about the stockholder, and that's one of the partners in the whole business, which I appreciate. And evidence of that is they have a nice investment thesis in their earnings, and they tell us exactly what their focus is on and what their growth uh, ideas are for the next couple of years. Let's go over that. So with the business, they want to grow, which is very good. They're growing within store, which is very good. They really focus on their earnings, and they really focus on free cash flow yield. They have a very good debt rating, and they have very good net debt to EBITDA. Very good. So all those things check boxes for me and make me feel comfortable that this company is really focused on me, the shareholder. One item that I missed is the cash payout. They both pay out a dividend, which isn't the biggest dividend in the world, but they continually buy back shares, which is also adding value to my existing shares. So I really like that about Kroger is that they're in partnership with the stockholder. Something big that's happening is Kroger wants to acquire Albertsons. And that acquisition, I think, would be a good acquisition. It would give them greater scale, greater revenue, greater free cash flow. So I think it'll be good for the stockholder. It'll be good for the customer. It'll be good for Kroger overall. The Federal Trade Commission is pushing back on that merger. It may happen, it may not happen. Would it change my uh, feeling about Kroger as a good investment? No. If one or the other happens, I think Kroger is a good company, and I'm comfortable with either outcome. Kroger provides full year guidance for the remainder of their fiscal year 2023, and their identical store sales is actually was brought down a little bit. They're still going to grow a little bit, but I believe that it's the deflation on food that is going on. As we look at the inflation reports, I key in on food, and the good news to the American public is that food prices are coming down, and that's very good. I remember when eggs were selling for like $8 for a dozen eggs. Man, it was expensive to have breakfast. But now eggs are way down. Other categories of food are way down. So that's great. That's great for the public. I hated to see food prices so high. And given that a lot of food categories are going down in price, it's good to see that Kroger is really holding to a growth trend. It's small, but overall, it's very impressive. Their operating profit is solid. Earnings per share is very good. And I'm going to be using that as one of the factors in my valuation based on earnings per share. And free cash flow is very good. Again, I'm going to be using that factor in my calculation of their value based on free cash flows. And they continue to invest in their business, which is very good. Kroger is just so well run. Everything is in its proper place with this company. Another thing that makes me comfortable as an investor in Kroger. I believe that Kroger is discounted by 41%. And what I mean is that I believe each share is really worth about $63.57, but the stock market will sell you shares at $45.07, leaving you a discount of 41%. I get there by valuing the company based on free cash flows and valuing the company based on the earnings per share they're producing. Let me take a look at free cash flows first. So based on the guidance that they had, and I double checked that against their run rate for the current year to date, and I think they're actually going to do better than 2.7 billion, but I'm going to go with 2.7 billion just to be conservative. I'm going to have a modest growth on those revenues and have a long-term modest growth on those free cash flows. I think I said revenues. I meant free cash flows. And I'm going to grow those free cash flows, in the first 4 years, and then have a solid growth rate of 3% for all years after year 4. So these are all the cash flows I expect out of the company in the future. I'm going to use an 8% weighted average cost of capital. That's a solid low weighted average cost of capital. Reasons for it is stable industry, great credit rating, solid company. And based on that discount rate, the net present value of all those cash flows is 56 billion. I'm going to add the cash they have, which is 2.9 billion, and take away the debt, which is 12.7 billion. And I get an equity value in Kroger of $46.3 billion. The current market cap is 32.4 billion. So therefore, based on free cash flows, I think each share is really worth $64, but the market's selling shares for $45. So it leaves a 43% discount on Kroger using free cash flows. Earnings per share, I expect for the next 4 quarters, they're going to be at $4.52, and that's right in line with their guidance. Their PE, it's a very well-run grocer, and their PE should be 16 based on my opinion, based on the industry. That's a good PE. Growth rate modestly at 3%. And based on an earnings per share valuation method, and the formula is here, I get a per share value based on earnings per share of $61.65. Shares are being sold for $45, so there's a 37% discount using the earnings per share value. I get a blended value and a blended discount of 41% on Kroger, and I blend the two methods, putting more weight in the free cash flow method, using 2/3 of that value, 1/3 of the earnings per share value. The net debt to EBITDA, really low, just a solid balance sheet. I believe that that's the way the ratio is today. And Kroger also calculated the net debt to EBITDA calculation after they acquire Albertsons, should that happen, and it's still under 3. So my qualifier is that it needs to be under 3, and whether they acquire or not acquire Albertsons, they're going to pass that test. Looking at where the Kroger stock has been over the last 12 months, it's been interesting. At the beginning of 2023, the stock did go up nicely. It was up quite nicely. It's had some volatility, some downs, some ups, and more recently, it's really had a downturn. Now, it has had a nice run up that most stocks have had a nice run up for the last 7 weeks, but overall, it's really lagged the S&P. It's only up 1.35% year to date, and it pays a 2.57% dividend. I happen to believe that we're in the opportunity zone for a value investor. I really like volatility as a value investor. because I do my homework. There's companies that I like that I really understand and really want to continue to accumulate shares over time. And when you have volatility like this, it gives me an opportunity to buy at a discount. And I can go example after example, but that's really a recipe for success for me is use volatility to my advantage, research companies, understand them, and then buy at the right times. So that way, my overall performance of my portfolio year over year really does well. And on average, I beat the S&P probably 3 out of 4 times. And that's how I do it is by buying at the right time. So let me now make a decision whether I should buy, hold, or sell Kroger based on the criteria. First, it's all about the company. Do I like the business? Do I think it's a good investment? Do I want to be a part owner? And do I like the management team of Kroger? The answer is yes. In fact, I would say that the Kroger management team is one of the best in business, just a quality company. Debt is well below 3 times EBITDA. It's actually at around 1.4. They offer a nice discount. So I'm going to be continuing to buy shares in Kroger. As we look at the economy is supposed to make a soft landing, meaning we're going to have a recession. In any recession, stocks that have, that are stable product stocks like food tend to do well. So I think Kroger is a nice hedge on that recession we're supposed to have. I think it's a good idea. A, good company to invest in, and B, the economy may set up for very good results out of grocery retailers. Hey, thank you for watching the video. I hope you found it interesting. I'd love to hear what you think of Kroger. Please leave a comment on this video. And also, please like the video and subscribe to my channel. Thanks again for watching and happy holidays.